As the financial year is drawing to a close, investors are scouting for tax-saving options under Section 80C. Now remember that investors can save tax on up to 1.5 lakh rupees of investments under this section, and a popular investment or a popular option to consider under this would be the ELSS. So what exactly is the ELSS, or the Equity Linked Savings Scheme? ELSS is one of the categories of mutual funds which primarily invests in equities or stock markets. Now, ELSS funds invest 80% of their entire corpus in the equity-oriented instruments. Now, being this equity heavy, they do have a potential to generate inflation-beating returns in the long run, and therefore many first-time investors do look at this option for the twin benefits that it has. One is the tax-saving benefit, and the other is the exposure to equities as an asset class. Now, investments in ELSS do qualify for a tax exemption under Section 80C. So, in case you haven't really exhausted this limit of 1.5 lakh rupees, investing in ELSS can definitely help you lower your tax liability. Now, what is the lock-in period here? Investments in ELSS are actually locked in for a period of 3 years, since the investment date, that is. Now, this means that you cannot withdraw the funds for 3 years since the inception of your investments in a fund like this. However, the lock-in definitely gives you more time for your money to grow, and this is because compounding can really weave magic. The longer you stay invested, the more returns that you can really expect. At the same time, the quantum of volatility really comes down if you really stay invested for a long period of time. Now, this is also an advantage if you compare the lock-in periods of, say, a PPF scheme, which is 15 years, the National Savings Scheme, which is 5 years. So, thereby, comparatively, the lock-in period is much lesser as well. Now, how can you really invest in an ELSS? The minimum amount which is needed for investment right here is 500 rupees, and there are then two ways of investing in it. A lump sum way, where you can put in a larger sum at a one point in time, or an SIP, where you can continuously, on a monthly basis or a weekly basis, whatever your convenience is, continuously do these small investment plans which you can continue to do for the next 3 years period of time. Now, let's also talk about the risks of investing in ELSS that also investors must know. Now, a risk could be that there are no guaranteed returns. As you know, that the underlying investment option where ELSS funds really put their money in is equities and stock markets, and in stock markets there is definitely no guaranteed return. However, as has historically been seen, is that every 3-year perspective we do see positive generation of the returns in stock markets, and therefore we also see positive returns in the ELSS schemes as well. Now, the other perhaps risk would be the lock-in period itself, that you cannot withdraw money for 3 years' time. Although there could be just like a last resort, but it is always advisable not to pull out your money before those 3 years. Most of the experts do advise individuals with high risk tolerance, individuals with high tax bracket, and individuals with a long-term investment horizon to really explore investing in these ELSS schemes. Overall speaking, the right ELSS fund can definitely do wonders for your own wealth, help you stay on a solid financial footing, and not only can you really bring down your tax liability, but the leverage, also the potential of the equities to enhance your riches as well.
If you like the video, do like, comment, share and subscribe.